chips are up today. Obviously, they've been right in the tariff storm, the eye of it. You look across the board. If you pull up the SMH, you want to just do it that way, up 17% in a month. So it's come off the worst levels. There it is, up 6 1/3% today. Steph, you bought more Broadcom today.
Yeah, I've been buying it for the last 2 months, right? And the stock is still down 14% from its highs. It went from 14 times forward estimates 5 years ago to 36 times. It's now at 30 times. It's still expensive, but I like what they've done in terms of the diversification to their revenue mix. AI is 30% of their revenue mix. Software is 40% of their revenue mix. That's a great combination. And oh, by the way, they just announced a $10 billion new buyback program. It's not huge, but it's actually an endorsement that they feel good about their business. And with the stock down, still 14% from its highs, I still think there's an opportunity there.
CNBC Pro looked at, non-Mag 7 names, or they looked at names with the most China revenue exposure that could win if a long-term deal between the two countries is reached. I'm talking ex-Mag 7. Broadcom's on that list, as you'll note, as is LVS, Las Vegas Sands, Qualcomm, KLA Tencor, Jimmy's Win, Intel, Corning, Aptiv, Teradyne. Jim?
Look, I mean, this is clearly, it's not just the numbers of where the tariffs went to. There was verbiage going into it and coming out of it that both sides want to not delink, not decouple. That's very important that these economies want to work together. That means that there will be cross-border flows, albeit we don't know where the tariffs are going to be. There's a lot of negotiation left to be done. But, if we get down to 30% or less on China, I think that you'll see plenty of cross-border flows that's going to inure to the benefit of a Qualcomm or a KLA or any of the chip manufacturing companies. Win, I think, has been undervalued overall. Steph, you're in your Las Vegas Sands. We have the same play going there. But with Win, there's far more than just China. There's Macau, there's Las Vegas, but it has been held back by China fears. And now with China, hopefully, this will help China's economy get on its feet, and that can promote more traffic to Macau.
At the end of April, for the very first time since inception of the ETF, we sold out of KLA Corp. Remember, what we're doing is a reflection of price, momentum. So if you look at all these semi-equipment names, the technical formation looks awful. KLA Corp, Lam Research, Applied Materials. The fundamentals, though, of these businesses, now that you get the rollback, that's why these companies are up 8-9%. So listen, I'm telling you, based on what I see in the momentum strategy, we spoke about positioning before. The positioning has probably been reduced to its lowest level since 2020. There's a lot of room to rebuild positioning in 3 names, which are very, very good quality companies.
Big day for retail as well, as you might expect. RH is up 17. Remember, that stock got absolutely destroyed in the earliest days of the whole tariff issue. Best Buy up 10, Five Below up 11. These are all percentages that I'm giving. Stephanie Link, Gap, set up 7. Target's up, even though it got a downgrade to a sell today. I guess you would expect these kinds of gains out of the discretionary space. I
mean, Gap just got destroyed because 27% of their supply chains are Vietnam. So now if that gets resolved, that's obviously positive for Gap and others, and you're seeing that today. But this stock still trades at 11 times forward estimates. It yields about 3%. I like the turnaround story with the CEO. He's been there about a year and a half. Zach Posen is their creative director. That's good. So they've got a lot of momentum. They've been gaining market share. They're getting back to basics at Gap. So to me, I like that name a lot. Target, I think that's a silly downgrade. I mean, the stock, my goodness, it's down 38% in the past year. Where were they? So I've been suffering with it, but that stock to me seems like it's awfully cheap at 11 times forward estimates as well. And I think they are trying. They're also trying to get back to basics. I mean, 50% of their business is discretionary. And we know that people haven't been buying a lot of discretionary. So I think they are going to fix. They'll get their margins back in order. That, to me, is a better buy than a sell. And
it's all about the, the no recession trade today when it comes to retail. Right. Walmart, Costco down. The names we talked about up. The airlines, the hotels, the booking, the casinos, the go out and spend money rather than hoard it.
Services.
Or just get by with whatever you got, because we don't know where any of this is going, right?
23 minutes into the show, I'm going to maybe present the fly in the ointment. and that's yields. And where do yields go from here? Because remember, I'm sitting with a TLT position, which is not doing so well today, as a 10-year is approaching 450. So the administration does not want yields to continue to spiral out of control. I'm not necessarily sure how they're going to be able to contain that. You and Jeffrey Gundlach had a great conversation about that last week. But what is actually going to be the mechanism in which they bring yields down? That could be the one challenge to the consumer if we continue to see yields move higher.
It's also the narrative around yields. Tell me yields are going up because now we have the no recession trade on. Don't tell me yields are going up because you have money flying out of the U.S.
Right, exactly.
That dominated the narrative, right? The anti-U.S. exceptionalism trade. Dollar is, crashing. You got yields rising because all this money's coming out. And now you can maybe take that off the table in its entirety.
Absolutely.
Look at yields going up and say, oh, well, right reason.
Plus the other side of the equation, which is inflation. We'll see what inflation comes in at the CPI tomorrow, but it's projected on the headline to be 2.3 and core 2.8%. I've been a believer that this. You want to go ahead, Scott?
No, I was going to say the Fed now, right? If you look at the cut, all this plays into the yield story. Well, September now leading the way where it was in the early summer.
Real interest rates are decidedly positive right now. The Fed feels that they are restrictive. There's room for interest rates to come down as long as inflation doesn't come out of control. We'll see if these tariffs get rolled back so we don't have to worry about it.